Good afternoon, everybody. My name is Desmond Gardner from the EIB advisory team, and I'd like to welcome you all today to our Fee Compass online thematic webinar on the audit of financial instruments in the 2021 to 2027 programming period. We're very pleased that you've joined us today for this topic, which is clearly very important to anybody who is looking to implement a financial instrument in this next programming period. I'm not going to talk too long because we have an excellent panel of speakers and a packed agenda, and it's really important that we get into the content as soon as possible. But let me just say one or two things about the format of the event. If we could have the next slide, please. Yeah. Okay, so you will see that we have divided the next 2 hours into several sessions on some of the key topics relating to the new audit methodology. We're firstly going to do an introduction, then we're going to talk about design setup, eligible expenditure, the payments, audit and combination, and finish with a discussion on irregularities. For each of these topics, we're going to do the same thing. Colleagues from the European Commission's Financial Instruments Unit are going to set the scene, describe the relevant CPR requirements, and then we're going to hear from colleagues in the European Commission's Audit Unit who are going to explain how the audit methodology responds to those requirements, what it says, and how they hope to see it implemented in the future. And then after 5 to 10 minutes of presentations, we then have some time for questions. And we'd like it if you could ask your questions on each of the topics in turn. If we get some questions early on, for example, in relation to audit and combination, we might just hold that question and then we will use it for the subsequent session. Okay. Without further ado, let's get on to the content. And I would first like to introduce to welcome us today, Jonathan Denness, the Head of Unit of the Financial Instruments and Relations with International Financial Institutions Unit at DG REGIO, European Commission. Jonathan, the floor is yours.
Many thanks, Desmond, and good afternoon, everybody. I see we have nearly 500 people online. This has been I think the presentation with the most registrations, or the webinar with the most registrations in Fee Compass history. Fee Compass colleagues can contradict me if I got that wrong, but we had nearly 900 registrations as of this morning. So clearly this is a subject of great interest, and there is a lot of content, and I'm not going to hold the content up for too long. I want to make just a couple of points. Please remember here that we are talking about financial instruments. We are not talking about grants. So this is we've developed an audit methodology for financial instruments. There is a separate methodology for grants, but here today we are talking about financial instruments. Secondly, I'd like to draw your attention to two things that my colleagues will be explaining in a lot more detail. And that is, first, that final recipients should not be audited. And this, I think, is a very important principle. It reduces the burden on those who are receiving the loans or the equity stakes or so on considerably, and will simplify the implementation of the financial instruments. And the second specific point I'd like to draw your attention to is the examination of intended purpose. And the examination of intended purpose takes place ex ante. And so there has to be a clear plan to use the investment, the loan, the guarantee, the equity stake, or whatever, for its intended purpose in a plan, in a business plan, in some other document, in a contract or whatever, beforehand. There is no need to do an ex post check about whether it was used for its intended purpose. So these are two aspects of simplification that I think will really help implementation of financial instruments in this period. And now I'd like to hand back to Des, and so that we can get on with the real content of the day. Thank you very much.
Thank you, Jonathan. And yes, without further ado, to introduce the new audit methodology, I would like to ask Axel Badrichani, the head of Unit DA6 in the Joint Audit Unit at the European Commission, to present the introduction. Axel, if I hand over to you, I think the camera will find you as you start talking as well.
Okay, very good. Thank you very much. It's always a pleasure to present the topic to colleagues. I see that we have a big audience. I'm a bit worried because I thought that we had clarified already quite a lot our audit methodology, but I see that there is still a demand. Maybe, I don't know if you had the occasion to read the audit methodology, but you will see that it is very short. It's less than 20 pages, and I think it's quite important to have this in mind, because we have tried to simplify it as much as possible in line with the CPR regulation. So in the CPR regulation, maybe if I can have the slide on the screen for colleagues to see the next slide. Yes. In the CPR regulation, the rules have been streamlined, and we'll go through them in a moment. And we had to reflect this in our audit methodology. And this is why I think we saw a need to update our audit methodology, and we also took into account the feedback we got in 14/20 from the different practitioners. Why do we have this audit methodology? Well, we had to prepare it mainly for us, auditors, both in the Commission but also in the Member States, so that everybody understands what we expect and how to do the audits. It's quite useful also for the managing authority, because they will see how we are auditing them, mainly during the implementation of the instruments. As an annex to the audit methodology, we have the checklist that we use. And I think it's also quite important to go through them. You will also notice that our checklist, both for audits of operation and for a systems audit, are dramatically reduced. It's ready. We consider that the audit methodology is, we wanted to have it ready before the beginning of the period, so that we have legitimate expectations for all the program authorities to understand what we are going to do, and we are not going to invent new rules during the implementation of the program. Next slide, please. Okay, so the scope of the audit methodology. Of course, our overall objective for us is to obtain reasonable assurance that the system functions and that the expenditure declared to the Commission is legal and regular. So this is our overall purpose. We have recalled in our methodology some basic principles. Jonathan mentioned some of them, such as we forbid, in fact, to do audits at the level of final recipient. We have insisted in our methodology on the proportionality aspect and the single audit approach. So we don't want to have duplication of work, of unnecessary work. We want to make it as simple as possible. When we audit, we have to take into account that there are different actors involved, different layers, and we have to see what these different layers are doing. Next slide, please. Okay, so what type of audits do we have? We carry out, and it is in the regulation, two types of audit: system audit, to see if the systems are functioning. We recommend to do those at the beginning of the implementation, at the beginning of the period, to be sure that the system, the implementation is well set up. And we have audits of operation. When we have expenditure declared to the Commission, the auditors are verifying on a sample basis, provided that this expenditure is sampled, whether the expenditure is legal and regular. Next slide. Okay, so this is not to scare anyone. it shows the fact that we have, although the audit methodology has been streamlined, in the implementation, we have many layers. From the bottom here, you see BISF. These are the banks. So they are the banks, in fact, in daily contact with the final recipient. And then we have the different layers above. When we audit commission, we first see if we can rely on the audit authorities in the member states. If we can rely on the audit authorities in the member states, we stop there. So we will see what an audit authority is doing. If we are satisfied, we don't need to go further. If we are not satisfied, or if we see a specific risk, we go at the level below. And we will go at the level of the managing authority or the intermediate body, who are doing themselves some controls, management verifications on the financial instrument. And each time, if we are satisfied, we stop. If we are not satisfied, we go down. When we see risks that are not properly addressed, we would go and collect data from the banks to see, for example, the loans, how they have been disbursed, how the banks have verified the eligibility of the final recipient, the eligibility of the expenditure. So this would be a type of checks that we could do. Important to mention in the I have insisted on the fact that we need to be proportionate, but we have also identified different risks depending on the different instruments. So it's not that we have risks, all the risks are always the same. There are specific risks for a loan instrument, for an equity instrument, for a guarantee instrument, and we focus on this risk. This is reflected in our checklist that is attached to the audit methodology. So this is to give an introduction of our audit methodology. I think colleagues will then go through each of the novelties we have in the CPR and what it means in terms of audit. Thank you.
Thank you, Axel. A very good introduction. I see that we have some questions have been raised over Slido, so thank you everybody for raising these initial questions. Perhaps can we see though the first questions on Slido, please? Great. Okay. So let's maybe I can answer the first question to some extent, where you can find the methodology. It's available on the Fee Compass website. I think we did send you a link as well in the welcome email for this event. I think you'll find so. And it's also, of course, published on the European Commission's Europa website. But maybe, Axel, we can talk to that first thing, the first question there about clarifying final recipients are not part of audit. The questionnaire comments, we've seen it as a standard practice to ask final recipients to submit, for example, account statements in equity. Yeah, what would your comment be in relation to that question?
Maybe one thing is the different actors, they are requesting documents from the final recipient, and we expect these documents to be available, for example, at the equity fund manager for an auditor to check. So if it is the documents that they request, which is needed, these should be available when we come and audit. We don't need to go back at the level of final recipient. The same, for example, for a loan agreement, it would be at the bank. We don't need to go and ask the final recipient to see the loan agreement. So these are the documents that normally are kept at the appropriate level, and this is where we go.
Thank you. The next question, question number 3 there, can you elaborate on what you mean by single audit? And I think that is, can we rely on the verifications carried out by the managing authority?
Okay, this is a bit a tricky question, because in the CPR now we have the possibility for managing authority to do risk-based management verification. And we expect the managing authority, probably compared to the period now, to do less controls than they were used to do. If an instrument is well managed, and for example, I have a fund of fund which is doing a proper job, I expect to have limited controls from the managing authority on the level below. When the managing authority is doing controls, for the audit authority, of course, they can rely partially on the work of the managing authority, but also from an external audit body. Quite often we have not the managing authority who is doing controls, but we could have an external auditor doing controls on the fund of fund, for example. For the audit authority to rely on these controls, they have to see how it is done. If they can assess how it is done, then they can base their verification on the level of, they can assess and they can take it into account. If they are not satisfied, they would need to complement with additional controls.
Yeah. Okay. Thank you very much. Can we see the next questions? The second question is, please give some more info over EPA. I think that probably means ECA, does it? I would imagine, by the European Court of Auditors.
No, this is the enhanced proportionate arrangements that we have in the CPR.
Okay, great. Yeah, apologies.
Under certain conditions, we are reducing, we have the possibility, if the programs are well managed, error rates below 2% overall the program, our financial instrument will be falling under an operational program. And if there are certain conditions for the program, we could have flexibility for the audit and also for the management verification. And these flexibilities that are offered under conditions in the CPR are the fact that we don't need to do system audit anymore. And we can limit the sample size of the audits of operation to 30. So if you are lucky to be part of a well-managed program, it will reduce the audit risk and burden that could fall on your instrument, because we reduce the sample size overall at program level, and hence let's say the probability that the instrument would be selected is reduced.
Great, thank you. Okay, can we maybe see the next slide? And I hope this format is working well, and thank you to everybody who's sending the questions and also liking them. Next question at the top is, what are the main differences compared with the previous audit methodology for the 14-20 period?
This is an easy one because I think colleagues will go through all these changes from the design of the instrument to the payment regime. You know, we don't have these tranches anymore. All those have an implication, and you will see this in a moment through the presentation of my colleagues.
Great, thank you. Next questions, please. Is it applicable for EAFRD as well? Will the POM use the same methodology?
Okay. It is not. This is not applicable for EFRD, our audit methodology. They apply?
Yes, they can be inspired if they want.
Okay, maybe Oana, I give the floor to my colleague Oana, who was in contact with.
Doesn't apply directly, but they can. Yeah.
Thank you. Good afternoon, everybody. So the legal framework for agricultural funds is more or less the same, because in the regulation they have reference to our regulation, but they have a specific structure. If they want to use our methodology for inspiration, they can, but they are not obliged. So it is not applicable directly, but can be a source of inspiration for them.
Yeah, thank you, Oana. That's a very full answer. Okay, so the next question, I think we've already touched on this one on Axel, about audit at the level of the final recipient. So when you say that the final recipient should not be audited, do you mean that part of the audit authority audits, or are you also referring to checks done by the managing authority? So
yes, so both. It's not, if we have a limitation for the audit authority, it applies also for the managing authority.
Yeah, so they should seek to get that material from the body implementing the financial instruments,
yes,
but not the final recipients. No, thank you. That's very good. Does this methodology, let's deal with some of these quite quickly, does it apply to the RRF?
No.
Yep, that's nice, fairly clear. Can audit authority or managing authority controls exceed the limits of the CPR, for example, by requesting visits to final recipients?
If it is not.
For us, this is forbidden. So the authorities could not respect the CPR, but this is something that we don't want. So we expect that no, they comply with the CPR. We don't expect visits at final recipients.
Yeah.
If I don't know what could happen, there are indications of fraudulent activity, and under the national system there are some inspections that are necessary. Of course, this can be done, but this is not at all the normal practice. This would be under certain conditions.
Yeah, great. No, thank you. I think maybe as for the last question before we move on, and thank you everybody. As I say, we will come back to the unanswered questions in the future, but maybe we can look at that. That things are moving around a bit. Yeah, that's that top question. The audit methodology for 1420 had a useful annex on the functions and responsibilities of each actor. Can people still refer to that for the or rely on that for the 2021-2027 period?
Well, I don't have it in mind completely. I remember the annex, the functions and responsibilities of the actor, they have not changed. They remain the same. So if for you thought that it was a useful document to clarify the roles of each, it can be. Then on exactly the type of controls that needs to be done, this we invite you to look at our current checklist, because we have streamlined, we are reduced, we are more focused.
Thank you. No, that's very clear. Thank you, Axel, and thank you to everybody who's raising the questions. We're going to move on to the next topic now. Yeah, as I say, we've saved the questions, and the next topic is the audit of the design and setup of financial instruments. I'm sure many of you who are connected are involved in that right now. So please do start raising your questions as soon as you like, to give people the opportunity to look at them and like them and vote for them, so that we get to them during the next session. So let me now introduce our next speakers. Radka Konstantinova from the Financial Instruments and Relations with International Financial Institutions Unit within DG REGIO, the European Commission, and Nataša Prah from the Audit Coordination and Methodology Unit in the European Commission. Radka, I hand the floor over to you.
Thank you, Desmond, and good afternoon to everybody. It is great to see so many participants today. So I will start, if we can have the next slide. I will start with the CPR provisions on the setup and design of financial instrument from the CPR perspective. So may we have the next slide? Yes, thank you very much. I will walk you through the legal requirements, and the audit and setup of financial instrument has three blocks: the ex-ante assessment, selection, and the funding agreement. So if we talk about ex-ante, this is one of the big novelties in the current CPR, that the ex-ante has been simplified and actually streamlined a lot, in a way with the purpose of making easier the setup and accelerating the setup of financial instruments built on the practices from 1420, but integrating the ex-ante better in the programming period. It is still a managerial tool, which means that still the managing authority is in charge of the ex-ante, but it is simplified in a way that in the Article 58.3, there from A to D, there are the four requirements which are needed for the ex-ante.
And I will not go into detail to enumerate them. Everybody can read them. But the idea is that in the programming period, in Article 22.3, we have seen that the market failures and the justifications for the form of support, grants or financial instruments have been already identified at programming level. So the ex-ante purpose is to help the managing authority to set up set up in concrete terms the financial instrument. So this is less prescriptive than 1420, and we don't expect huge documents. It could be a short and straightforward document. Also, bear in mind that it is possible to reuse the existing ex-ante assessment from previous period. And the last point I want to make is that this is a living document, and there is a sentence in the Article 58.3 that it can be reviewed and updated. So it means that the actual implemented financial instrument can not be 100% what is in the ex-ante assessment, but what we would like to see is the justification for this inconsistency and difference which can be between the ex-ante assessment and the implemented financial instrument. So we say that it should be justified. And Nataša will present the audit aspects from the ex-ante.
Yes, good afternoon to everybody as well from my side. So firstly, to tackle when to start with the audit of the design and setup of the financial instrument. Well, it is not very detailedly prescribed, but it is quite logical and have a sense when we will select the first item or the first payment claim which refers to the financial instruments. So in the frame of the ex-ante assessment, it is definitely not expected that the audit authority will reperform the ex-ante assessment, but it is this audit should be focused on three aspects. First aspect is related to the completeness. What does it mean? It means to check whether the ex-ante assessment includes or incorporates all the requirements which are defined in the legal framework already mentioned in Article 58.3. So there are less of them, and the audit authority is expected to, if everything what's supposed to be in the ex-ante assessment, it is there. So this is the first aspect. The second aspect is related to the date. Of course, this ex-ante assessment is supposed to be prepared before or prior the managing authority pay the contribution to the financial instruments. This is the second relevant aspect of the audit. And the third is, of course, the coherence between the ex-ante assessment and the implementation of the financial instrument in practice. So, as already mentioned, there might be some deviations of between this what is foreseen in the ex-ante assessment and between what is actually going on. But of course, it is not expected to redraft again this ex-ante assessment, but just to justify these deviations or inconsistencies. Of course, if there are some deficiencies, inconsistencies noticed during the audit, the result should be, of course, in the audit report as observations and proper recommendations on the basis of these observations, but mainly it will be recommendations without a financial impact. Maybe what is also worth to mention is, and it has been already mentioned, that this ex-ante assessment can not necessarily be the completely new one, can be just updated in comparison with the ex-ante assessment. And of course, in case of updates, also these three aspects related to the completeness, date, and the coherence supposed to be checked. Now I propose to go to the further.
Yes, thank you, Nataša. So we can go to the second component of the check of design and setup of a financial instrument, which means how the selection has been conducted. In terms of CPR, there had not been any major changes in the logic of the selection. It is not so much of a novelty how the financial instrument will be implemented. We have Article 59.2 saying, of course, that the managing authority will select the bodies implementing the financial instrument. So the idea is that the cases when we can have a direct award, they are explicitly mentioned in the Article 59.3, and this could be a direct award to EIB. It could be to international financial institutions, and also important is the point C of the CPR, which includes the national promotion of banks institutions. The conditions, they are all listed. There are several conditions which has to be complied. But this is the provision where they can be directly awarded. And also the point D, other bodies on the point exclusion, Article 12 of the procurement. But for this, there are specific procurement checklists, and auditors are aware of how to check the selection of the bodies from the previous period. And specific attention of the checking the system for cascade for when we have a holding fund, that there also selection of the specific fund has been done in transparent and correct way. So in conclusion, whatever it is not in the Article 59.3 for direct award, it should be used the principles of public procurement to select in a transparent, correct way the bodies implementing the financial instruments. And Nataša, over to you.
Yes, and according to this, also the audit procedures will follow. So as we have heard, we have two levels of selection. Firstly, the selection can be made on the level of the managing authority. And secondly, on the lower level, the selection can be made on the level of the body implementing the holding fund or the specific fund. And as already have been mentioned, what the auditor is supposed to check. Firstly, if there have been a direct award, so the direct signed contract, the audit is supposed to check if the institution to which the direct award was given is on the list in the Article 59.3, and if this is not the case, by these procedures for which the rules are defined in the Public Procurement Directive and national laws. Of course, if there are some inconsistencies or incompliances detected by the audit, there might be some observation followed with the recommendations, which might have in this situation also the financial impact. And this refers mainly to the non-respectation of the public procurement rules. So if the competitive procedure is not correctly applied, then there might be some recommendations with the financial impact in the sense, or which are actually defined in the guidance, which foresee the flat rates in case of the breaches of the public procurement law.
And we can go to the next slide, talking about the funding agreement. This is the foundation of the financial instrument, and we might say that this is an extremely important document when we set up a financial instrument. The legal basis for this, you have it on the left side, 59.5 of the CPR. This brings you to Annex 10. Where all the requirements of what should contain these funding agreements are mentioned. So we have two big cases in case the financial instrument is implemented directly by the managing authority. So we have to have in the funding agreement the investment strategy, the business plan, how the resources will be reused, all these elements which are in the Annex 10. And in majority of cases, when the financial instrument is implemented under the responsibility, then we have the Annex 10.1, when we have not only the investment strategy, but we have also the audit provisions, keeping of documents, everything, the reuse of resources, everything which would be related to the functioning of the financial instrument. So this is really the core document of every financial instrument which auditors will be looking at when they see how the financial instrument is set up. The point to bear in mind is also when we have the continuation of financial instrument across programming periods, it is, as you know, allowed, and it is happening. The amendment of the funding agreement has to be done by the end of 23 to use this provision to ensure the continuation between programming periods according to Article 68.2. And also bearing in mind the procurement rules and the CPR. So if the procurement has, and the way how the financial instrument is continued is not described, and there are no provisions in the existing funding agreement, then there should be a new conducted and selected financial instrument. So it has to be foreseen continuation of the financial instrument, and the funding agreement should have foreseen that by the end of the 23. And the implications for the audits?
Yes, thanks. Of course, audit have to check the completeness of the funding agreement, which means that in case on the investment strategy, there should be fulfilled the minimum requirements which are listed in this Annex 10.2. And in case of if the financial instrument is not performed directly by the managing authority, then of course the requirements from Annex 10.1 supposed to be respected. So this is the completeness. Then what has already been mentioned related to the rules on public procurement, in case when we are speaking about the continuation of the financial instruments across consecutive periods, so having the financial instruments in 2014 and 2020 and then continue in 21-27, these amendments or these extensions of the funding agreement supposed to be in accordance with the public procurement rules. Otherwise, we have to start with the new public procurement. Then, of course, there is a need to check the consistency of the eligibility rules, which are defined in the funding agreement, with, of course, the eligibility rules which are defined or foreseen for the program and priorities. In case we are speaking about the use of the differentiated treatment of investors, this should be as well in line with the investment strategy, and also in the funding agreement there are supposed to be also the provisions related to the reuse of resources returned, which can be during the eligibility period, of course, used for further investments either in this or some other financial instruments. What, of course, the audit is supposed to check is as well here the date, which means that the funding agreement is supposed to be signed before the managing authority is delivering the contribution to the financial instruments. Again, if there are some inconsistencies, incompliances, observations in the audit report, together with the recommendations, mainly without financial impact, except in cases when we are speaking about the non-respect of the public procurement rules.
Thank you, Nataša. And that last point, I think you've made it a couple of times, and it's very worthwhile and taking on board. So thank you to Radka and Nataša. You've taken us through the 3 steps: ex ante assessment, selection and funding agreement. Maybe we should move straight now to some questions. We don't have a lot of time for questions here, but I think the first few are all about the ex-ante assessment. And I think the first question is, what are the requirements for the institution preparing the ex-ante? So maybe Radka, you could answer that, and then Nataša, perhaps the next two questions there are about that comment you've made about auditors are not expected to reperform the ex-ante. I think the question 3 is, should they not be doing it? And I think the earlier question was similar to that. So Radka, perhaps you could just outline the requirements, and then Nataša, you could comment on what the audit methodology suggests the correct approach should be.
Yes, so the requirements are what the ex-ante should contain, and these are the requirements of the program contribution, target recipients, how the FI will address the policy objectives, and leverage final. But this is what it should contain. It's not who should perform it or what are the requirements. So it could be done in-house by the managing authority. It could be done by somebody else, but it is really, especially in the case that we have continuation also allowed across the programming period. So we do not say in the CPR who should be doing the ex-ante assessment. So the requirements are for the ex-ante itself, for the document.
Yeah.
Can I just add, Desmond, that
please.
What's important here is that the managing authority has ownership of the ex-ante and sort of makes some sort of contribution and doesn't just contract it out to consultants and then sort of take the consultants ex-ante sort of and not look at it at all. So I would add that point.
Thank you, John.
Yeah.
And Nataša, do you want to then comment on what the methodology says in terms of the approach? Auditors shouldn't reperform the ex-ante assessment, so maybe what should they?
No, I do apologize. I didn't obviously be sufficiently clear. So not the reperformance of the ex-ante assessment. As already has been mentioned, the audit authority is not the owner of the ex-ante assessment. The audit authority is just reviewing, and I've mentioned 3 aspects which have to be checked in the ex-ante assessment. So this is the completeness, the date, and the coherence. So if everything what's supposed to be included is included, if it has been signed before the money has been delivered, and if it is what is stated there in coherence with this, what is going on the spot. If not, if there are smaller deviations, not the new ex-ante assessment, but just the justification of the differences.
No, thank you. And yes, and maybe that picks up that next question at the top about where when you're talking about the coherence between the instruments that are implemented and what the ex-ante's findings and recommendations were. Yeah, if there is a deviation, what should a managing authority to do? I think the questioner asks, is a communication to the monitoring commitment to justify the deviation be enough to ensure the completeness is okay, that they've satisfied the requirements of the audit, shall we say?
Yes, it should be as to keep this ownership of and that the managing authority is always responsible and in the driving seat for this. So we expect that they are aware also, and they are endorsing this explanations and deviations, because the ex-ante is in the monitoring committee. They are presented in the beginning before going into the operational side. So the ex-ante is presented. So if in the end the reality will show a different financial instrument, then the monitoring committee should be made aware and to approve this.
And a report to the committee would be a good way of documenting that justification, I guess, is what you would say. Yeah. Okay, that's great. Thank you. We've got lots of questions on this topic, but I do have quite a strict timetable. So, as I said, we will certainly come back to these, and thank you for everybody who's raised them. But I think we should move on, because the next topic is the verification of eligible expenditure, which John flagged up at the beginning as being a key topic, and I'm sure there'll be equally a lot to say on this one. So thank you to Radka and Nataša. I'd like to introduce the speakers for this next session. Oana Dordain, the Deputy Head of Unit, who I'm sure you all know from the Financial Instruments and International Financial Relations Unit at DG REGIO, and Dana Greceanu from DAC, the Audit Coordination and Methodology Unit at the European Commission. Oana, Dana, hello to you both. I think, Oana, I hand over to you first.
Thank you very much, Desmond. Good afternoon again, everybody. So if we go to the next slide, we are tackling mainly the issue of eligibility for the use for intended purpose in this presentation. But just to make a general remark that for eligibility, it didn't change the main purpose of the eligibility for financial instruments. So the eligibility of what it is paid by the Commission is what it is paid to final recipients or to the support of the final recipient, or the amount set aside for guarantee contracts for eligible loans. And these eligibility rules are, of course, in the CPR, like general purposes, but also there are also national rules. And as Nataša and Radka were saying, in the funding agreement, which is the most important document, and of course, if additional eligibility rules are in the financing contract or loan agreement, this would also have to be taken into account. John underlined from the beginning that this is the biggest change in the CPR, that the support is to be used for the intended purpose, and this is a part of Annex 13 of the CPR. But it's a novelty for us, for structural funds. It is not a novelty for financial instruments in general. We just align to what it is done under EU-level instruments for some time, and also now for InvestEU. So the purpose of the financial instruments is to give the financing means for the investment. So it should be checked at that moment in time, and it is what is happening now with all the financial instruments at EU level. We have bodies, and the colleagues presented the bodies which are responsible for the implementation, and these bodies are responsible for their obligations, including for eligibility. And during our presentation, we'll have the colleagues from EIB and EIF, which will present what kind of controls they are doing. We had a question in the chat if the MA can implement directly a specific fund, and this is possible. So through public procurement, a managing authority can select banks, and these banks are becoming bodies implementing the specific funds, and they will be responsible for the investment and to follow the eligibility criteria, which are defined in the different agreements. It is very important that the documentation is there, and we do not go to the final recipient because it is not possible. So the entire chain of the implementation of financial instruments, the documents should justify the purpose of the loan. So ex ante, as is said. And of course, the banks have to follow their normal banking practice and not to disturb so much the banking practice, because they are putting also private funds into the instrument. In the next slide, we are coming back a bit on the use for intended purpose. And this should be really detailed in the loan agreement or the business plan or credit risk assessment. So for our funds, it is not possible to give a loan without the purpose of the loan, because this will be the main document which will help the authorities in the chain to justify that the loan is to be used for intended purpose. So we are going out of the invoices, but we should use the standard banking practice of the banks, and we should avoid the gold plating. So we should not create additional rules which are not needed. And I do not recommend you so much to go to the previous audit methodology, because it will be a little bit confusing. So except the document where we explain a bit the responsibilities of the bodies, the rest of the methodology, you should keep it for 1420 and start from scratch with this new audit methodology. And in order to impose the obligations on the bodies for the implementation, all these obligations should appear in the funding agreement, and they should be clearly set out from the beginning, that all the parties in the game will know the rules from the beginning. And now I hand over to Dana for the audit aspect.
Yeah, thank you, Oana. So, provided these new changes in the CPR, in the legal framework, then the auditors will not anymore check and will not look for an evidence regarding how the intended purpose was achieved, but they will look for an evidence about how the intended purpose is to be achieved, meaning that the focus will be on ex-ante verifications and on forward-looking evidence like funding agreement, business plan, or equivalent document, or investment decisions. As Oana mentioned before, the bodies implementing financial instruments remain accountable for verifying the eligibility. This is very important because it means that in this context, the auditors will have first to understand the banking practice, will have to understand the control mechanism in place and the monitoring system, for example, that the body implementing a holding fund is exercising over the body implementing the specific fund. So the auditors will check basically the evidence, will try to collect the evidence and will check the verifications made by the bodies implementing the financial instrument, confirming ex ante that at the moment of the investment decision, the investment is to be used for its intended purpose. Next slide, please.
Here we present another novelty related to eligibility, which is linked to the possibility to continue a financial instrument from one programming period to the other. We have three cumulative conditions legally that it can happen. So it should be a continuation. So it's a financial instrument which continues what was done by the financial instruments in the previous programming period. And the legal and financial agreements were made before the starting of the continuation, so it will be by the end of 2023. And also, through this article, we are not creating a derogation for eligible expenditure, but we have this condition that the instrument, so the structure as such, can continue from one period to another, but the eligible expenditure has to be incurred in the new programming period. Yes, so the structure for the bodies implemented financial instruments and the legal obligations of the parties are set up before the end of 2023, but the expenditure has to happen in the new programming period. And of course, this is not a derogation from the Public Procurement Directive, so it means that the public procurement was already done in order to allow for this continuation. So we do not expect to have many continuations from 1420 to 2127, but we expect to have a lot from 2127 to the next programming period.
Yes, so from an audit point of view, in case there will be financial instruments carried over during the next programming period, so the auditors will first verify the fulfillment of the three cumulative conditions that Oana has mentioned. In addition, the auditors will verify whether, in case of direct award, whether the conditions for direct award are still fulfilled, and in case of a competitive selection, whether the rules for applying the public procurement directive have been complied with. Thank you.
Thank you, Dana. Thank you, Oana. Very clear and very interesting topic. We have some time for questions on this, and I can see that the questions have been coming in. So thank you to everybody. And just to answer, I think somebody has raised it on Slido about the unanswered questions. Yes, we know we aren't going to be able to answer them all, and we're sorry about that. But we can assure you we will come back to them and answer them again in the future. So rest assured that will be the case. Thank you. That was the question. Okay, so yeah, the first question I think is really, to some extent, you've just answered it with the presentation, but maybe you could just expand a little bit about what is the difference between eligibility of the use for support for intended purpose. So this perspective, use of support for the intended purpose. I think it's the support will be used for the intended purpose, I think is the test. And then the eligibility of investments ex ante and ex post. So yeah, what is the difference between those two concepts? The eligibility of expenditure for use of support for intended purpose and the eligibility of investments.
Well, eligibility of the investment, I would say, encompasses the checks of the eligibility on the use for intended purpose. So eligibility of investment, I would say, is more complex than using just checking, verifying the eligibility of the use for intended purpose. So as we mentioned, verifying the eligibility of the use for intended purpose, according to 21-27 programming period and CPR rules, only the ex-ante verifications will apply. So only the intended purpose will be verified. Now, regarding the eligibility of the investments, that is a bit more complex because there are additional rules to the intended purpose. For example, just one example, general eligibility rules say that the investment should not be physically completed before the date of the signature of the agreement. So there are additional rules to verify the eligibility of the investment, and eligibility of the investment here, we can enlarge the concept to include also eligibility of final recipients, eligibility of the field, of the area. So it's much more complex than just verifying whether the support was used for its intended purpose, or in this case, is to be used for its intended purpose.
Mm-hmm. No, thank you, Dana. Yep. Sorry, Oana, did you want to add something?
Yes, because it was mentioned ex post and ex ante. In fact, both are ex ante. There is nothing which has to be done ex post.
Thank you. Yeah, and then I think that's linked to then the next question. So to stay on that theme, are auditors entitled to check how the financial intermediary is monitoring actual use of funds? So I guess that is the ex post topic.
The auditors will actually focus, and they have actually the obligation in a way to check the controls in place, put in place by the financial intermediaries, but not, well, to monitor not the actual use of funds. So as we mentioned, we do not expect anymore, like in 1420, a monitoring and a control on the actual use of funds. We expect only an ex-ante verification based on business plans, contracts, investment decisions, on how the intended use of funds is how the use of funds is intended. So, meaning that the auditors, first, the bodies implementing the financial instruments will have controls in place for that. So imagine that the final recipient will submit a business plan together with an application. The bank will have to check the application, the business plan, and to identify the intended use, the intended purpose of the investment. And they will stop at that level, at ex-ante level. And the auditors will not go further than that. The auditors will just verify the controls in place exercised by these bodies implementing the financial instruments, by the banks.
Thank you, Dana. That's very clear. Oana, did you want to add something to that?
No.
No, great. No. I think that's really helpful to emphasize, because it is a change, isn't it? So it's something both managing authorities and audit authorities need to get used to, I suppose, in terms of the new methodology. That the managing authorities controls should be on that ex-ante process, that is documented how the funds will be used at the time of the investment decision, and then it makes sense it therefore follows that is where the audit should therefore focus in the future as well. So I think hopefully that new arrangement, that change has come across to our participants today, and maybe we can move on, look at the next questions. I think we might well, can we deal with that first question, we want to take the most popular questions. I think this is in relation to the previous programming period, I'm guessing, isn't it, the CDR? So how is it verified that financial investments have not been fully executed at the date of the investment decision? No, sorry, yeah. So how would you verify, therefore, that the project hasn't been completed before the investment decision has been taken? Is the question there.
Well, that will be, so the final recipient will submit an application, and that application will be backed up by a business plan and other supporting evidence to justify the intended purpose and the need for the support that is requested. So, whether the investment was fully executed or not, that will have to be verified by the bank based on the application submitted by the final recipient. And the verification will be quite simple, because that the bank will request the final recipient to submit, for example, accounting evidence proving that the investment that is intended. So based on the accounting, we can see what are the investments that are already completed or ongoing. And based on accounting records, it is easy to identify whether the investment for which support is requested has started already or has been fully physically implemented or not. So based on it will be still the responsibility of the final recipient to prove this, and the bank has also the responsibility to control. But based on evidence, so no physical control to the final recipient on the spot to check whether the investment was completed or not.
Thank you. No, that's really helpful. I will, if I may, take the third question on that list there, because it relates to continuation. We've got just a couple more minutes, and I think as we've covered continuation, it would be nice if we could address this question, which I think is very relevant. So if the financial intermediary was selected within the public procurement rules, the holding fund must ensure that the public procurement rules are respected for the modification of the contracts as well. I think we dealt with that in a selection knowledge hub a few years ago. What happens when the public procurement rules are not respected? I guess that means in relation to the modification of the contracts.
If the public procurement rules are not respected in the past, and we can only assume that corrective measures have been implemented since then. And of course, there will be a problem to continue with some contracts that were problematic. That is one issue. Then we also advise, but of course there is no obligation that these contracts, assuming that the public procurement rules were respected, will not stop, will not end by the time when the programming period ends. So meaning that if you intend to continue with some financial instruments, maybe you can already anticipate when doing public procurement and concluding contracts to have a contract that covers not only one programming period but overarches a bit two programming periods. Maybe not completely the second one, but that would make it easier. But we expect that the rules for competitive tender are respected, of course. Otherwise, you risk to end with irregularities and financial corrections in both programming periods.
Indeed. And as Nataša explained in the last session as well, it's relevant person. Sorry. Somebody want to add something?
If I can add, Desmond, in case of non-respect of public procurement rules, the irregularities will materialize in financial corrections on the level of management costs and fees. And it depends also on the level of irregularity. So if there is no publication at all, for sure, the correction will be much more important than if there is a publication, at least at national level. But the impact of public procurement irregularities is linked to the level of management cost and fees because it's linked to the contract, service contract, which is bought by the contracting authority.
Thank you, Oana. Yeah, that's very good and very helpful. Okay, let's move on because we're doing well. We're keeping to time. So thank you to Dana and thank you, Oana, and thank you everybody for the questions. Hopefully we will have an opportunity to come back to some of them maybe before the session ends. Let's move on to the next topic, which is another change under the CPR, the payment regime, which I'm sure you're all now familiar with to some extent. So what are the implications of this new regime? So to take us through that, I'd like to introduce Ieva Zālīte, a policy officer from the Financial Instruments and Relations with International Financial Institutions Unit at DG REGIO, and also welcome back Nataša Prah from the Audit and Coordination Methodology team in the European Commission. Ieva, shall I hand over to you?
Thank you very much, Desmond, and good afternoon to everybody. So if we speak about the payment applications and if we look at the legal requirements, then we see a very big change as to how the applications for payments are regulated to the Commission, and especially in the case where the financial instruments are implemented under the responsibility of the managing authority. So these are the situations that that colleagues covered in the previous slides. So first of all, there is a possibility of an advance payment application of up to 30% of the program resources committed in the relevant funding agreement. And before such payment application is made, as colleagues identified and indicated, the program resources should be paid to the financial instrument first. It's important to mention that for this advance payment of up to 30% should be cleared, but no later than in the final accounting year. Where we can see this advance of up to 30%, of course, it will be first included in the payment application itself, but also in the annex or appendix to the payment application, there is a table that requires to disclose this advance of up to 30% and also its clearance when it happens at some point later. And maybe if we are on the topic of advance, it's important to highlight that there can be only one first payment application. So there is a big difference as compared to 1420 rules. And another big novelty is that there are no more payments in tranches. So rather payments are made based on reimbursement of expenditure. So this is a notable feature, and meaning that only incurred expenditure, for example, individual transactions, if we look at, for example, loans disbursed, or equity investments made in final recipients, and management costs and fees that would be included in payment applications to the Commission. If we, the feedback, if we look what the practitioners say about this legal provision, overall it's accepted as a positive feature and a positive development as compared to the previous programming period where we had payment applications including tranches and afterwards rather complex and more difficult additional controls and verifications. And just to mention where the managing authority implements loans and guarantees itself, there is no change as to the past. And now I hand over to Nataša, please.
Okay, thank you. Yes, from the audit point of view, when we are speaking about the payment applications, we are actually having three different situations. Firstly, we have an advance payment up to 30%, which will be certified to the Commission But of course, there might be just a limited checks performed. What can we check from the audit point of view in relation to the advance? Well, firstly, we can check if the advance really has been paid out before the money has been asked from the Commission, before the payment request has been sent to the Commission. This is one check we can do. And the other check the audit can do is actually checking the amounts. So if the amount of advance payment is not higher than 30% of the program contribution which is committed. So this is really very limited area from the audit point of view. And on the other hand, as already mentioned, since there will be no advances anymore, like it was in the period 2014-2020. Every single payment claim will actually present incurred expenditure and should be audited like any other payment claims for grants or for maybe other projects. What already has been mentioned in relation to this clearance of this advance. So this advance, where very limited substantive testing can be made at the very beginning, this advance have to be cleared. Cleared means that the money from the advance have to be invested in some final recipient. And this can be checked when this advance payment and afterwards also these checks can be, additional checks can be performed. And it is also foreseen that this advance supposed to be cleared not later than in the final accounting year, but this depends on the particular situation. There are no rules. There is just a deadline when the advance has to be cleared.
So if we can now move to the next slide, please. If we speak about the payment regime, and we said it's simplified as compared to the previous programming period, it has also implications on sampling. If we speak about general sampling principles for the programming period 21-27, they remain the same as those in the previous programming period, meaning that only expenditure declared to the Commission are included in the population. What experience shows from 14-20, and it suggests that financial instruments do not give rise to more irregularities than a grant operation. And often there are less irregularities. Therefore, it is expected, unless there is really increased risk identified for a particular financial instrument operation, then financial instruments don't need to be separated from the grant operations for the purpose of sampling. So if we speak about combined financial instruments in one operation, and this will be covered later on, then the application of the same approach for grant and financial instrument operation means that there are no special requirements for operations which combine financial instruments and grants. So these operations will be treated in the same way, and there is no need for separation through the different samples. So, in the previous questions, there was a question about stratification. So this remains an option, and it's not an obligation.
Yes, as already mentioned, what will be in the audit population? In the first audit population, there will be definitely the advance payment and all incurred expenditure, which will be paid out in one particular accounting year. And this will count as well for the calculation of the error rate. But as I have already mentioned before, in this advance payment, which is up to 30%, there will be really very limited tests performed. So it is really needed that we or the audit authority do take care and do put some efforts at the end when advance will be cleared. So when there will be advance, when we will clear or when you will clear the advance, that means that some additional audit work will be needed to be able to satisfy yourself that also this money has been spent according to the rules. But definitely this part, this testing of the clearance of the advance payment will not be any more part of the audit population, since the advance as a whole has already been included in the first audit population.
That's great. Thank you, Nataša. Thank you, Ieva. And we've had a few questions in on sampling and other elements that you talked about. So let's get straight to them. I think the first question is really more from the previous session, so I will skip that if that's okay, and we can take the second question, which is to select the transactions to be audited. Should we abandon the random selection method provided for in the GDPR for audit authorities and rely only on the managing authorities' verifications? Technical question, but
no, this is not the case. Well, this depends, but anyhow, if we say that we will not stratify the population, so if the audit authorities decide to have a common population, that means that all transactions, all payment claims deriving from the financial instruments or from the grants will be in one population. And according to the methodology which audit authority has selected for picking up or for taking out the sample, the same methods should apply. And as well, even if the audit authority decide to make a stratification in the sense that in one stratum only the transactions which are related to the financial instruments are covered, this also depends on the methodology. So they can use whatever they want. And as you know, we have now this regulation where the rules for the sampling are defined, and this is valid as well for the transactions or for the payment claims which are related to the financial instruments.
Yes. Thank you, Nataša. And the sampling regulation is mentioned in the Fee Compass Knowledge Hub report. I'm sure we can provide a link when we publish the presentations in the final one. So yeah, so then maybe the next question is about sampling as well. Sampling stratification ultimately takes place at the level of the final recipients that have been supported via the intended purpose of the financial instrument. So what happens? I suppose the question is how is that done? Is that what they're asking there?
The stratification has to be defined by the audit authority. If they want, they can decide to take this direction, so to stratify all these transactions which are related to the financial instrument. It is not necessary, but they have to review their previous practice from the previous year. What does it mean? How much errors have been coming from the financial instrument operations? How much errors are related to the grants and so on? The combination of all of these will then help the audit authority to be able to decide upon the proper methodology. But of course, if, for example, what maybe was not emphasized before, if the audit authority is not deciding to stratify the sample, that means that also the errors which will be found in the transaction which is coming from the grant, these errors also will be then projected or extrapolated to all these payments claim which relates to the financial instruments. This is then the way of what they have to take into the consideration before deciding what kind of sampling method to use.
No, thank you, Nataša. And maybe we'll just try and take one further question, but I would like to try and stay. We've answered, I think, that top question. I think you just responded to that, and that is in relation to the things. Yeah, is there, in terms of our last question, would it be useful to talk maybe the top question is about Article 7 from the 2014 regulation about criteria for selection of bodies implementing financial instruments. As you covered this in the first session, Nataša, perhaps you could just answer that. Are those criteria still applicable in 21-27? This is the reference to the CDR, is it?
No,
of course not.
The legal basis has changed.
Now we have to
58.
take into the account the legal basis which is which are covering period 21-27.
Yeah.
59.
And it's the public procurement rules.
It is in Article 59.3.
0.2 and 3.
Yes.
There's no more delegated regulation.
Yeah, exactly. Okay, great. Thank you for that. We will have to keep moving. We will try to come. We will certainly come back to the questions in the future. Thank you, everybody. Let's move now to the next topic. Another novelty in the CPR is the ability to combine financial instruments with grants in a single operation. So to talk about that and the audit implications, I'd like to introduce again Oana Dordain and Dana Greceanu from DG REGIO and the Audit Unit at the European Commission. Oana, maybe I'll hand over to you. Thank you.
Thank you, Desmond. The combination of grants and financial instruments in one operation, we consider it's the biggest novelty of the 21-27 legal framework. And in order to be able to apply the rules for financial instruments to the grant component of this combination, some conditions have to be fulfilled. And these conditions are that it should be one single funding agreement for grant and financial instruments. So when the managing authority is setting up the financial instrument, they should put the obligation of the body implementing the financial instrument that the grant and the financial instrument are managed together. So that's why we have to have this obligation in one funding agreement. At the level of the financial instrument and not at the level of each investment, we have to explain, the managing authority has to explain how the grant is linked and necessary to the implementation of the financial instrument. So the grant component should help the financial instruments to achieve objectives better, let's say. Either we cover a financing gap, either we want better policy objectives, either we want incentives to move from the grant logic to the financial instrument logic. But this explanation should be given in a document before the setup of the instrument. So it can be in the funding agreement, it can be in the ex-ante assessment, it can be in the program, it can be in a separate document from the managing authority. The regulation does not impose where this should be explained, but it should be explained and have a justification. We have also a condition that the grant should be lower than the value of the investment supported by the financial product. And we try to give here a very simple example. I mean, when there is a loan, it's easy. Yes? If we have a loan of 100 and we give a grant of 30, we'll have to compare the grant of 30 to the 100. Yeah, the total investment will be 130. The example we are giving here is for guarantees, where the eligible expenditure is not the value of the supported loan. So that's why we are saying if you have 60 capital rebate and 30 eligible expenditure for guarantees for a loan of 100, so in fact the 60 will be the capital rebate for the loan of 100, we have to compare a 60 to 100 and not to the 30, which will be eligible expenditure to the Commission. It's a bit technical, but we need to understand that we refer to the investment supported by the financial product. So what is going really to the final recipient? And all these calculations have to be done at the level of the financial instrument. So not investment by investment, but at the level of the financial instrument. Both distinct forms of support, so it means the loan and the grant, should be provided by a body implementing the financial instrument. The regulation does not say it should be the same body. So if you have a holding fund and a specific fund, you can have the holding fund managing the grant and giving the grant, and you can have the specific fund giving the loan. But it is not possible to have the managing authority giving the grant and the bank, the holding fund or the specific fund giving the loan, because in this situation will not be under one financial instrument operation, we'll have two separate operations. So if all these conditions I explained, which are at the level of the financial instrument, are fulfilled, we can consider that the grant is not a grant in the sense of the CPR, but it's a grant component in the financial instrument, so we apply the financial instrument rules. Please, Dana.
From an audit point of view, as we are talking about combinations in one single operation, as Oana already mentioned, the reference document for the auditors will be the one funding agreement that is supposed to cover both the needs and the implementation modalities for both grants and financial instrument components. So then the auditors will also look for the justification that Oana has explained, why the grant is linked and necessary for the financial instrument. In whatever document this justification is provided, in the ex-ante, in the funding agreement or other document, that the auditors will look whether such a justification exists. And of course, important also is to check that the grant component does not exceed the value of the investment supported by the financial product. But the auditors will not check this for each single investment, but this verification will be done at the level of the fund and has to be complied with by the end of the programming period or end towards the closure of the financial instrument, if that is before the end of the programming period. So in the final accounting year. So this verification will not be performed by the auditors before the final accounting year. And of course, the auditors will check whether the financial rules are applied during the implementation, because we are talking about a combination in one single operation and the financial instrument rules have to apply. Next slide, please.
Combination of grants and financial instruments was also possible in 1420 for very specific grant components like interest rate subsidies, guarantee fee subsidies, and technical support. Now in 21-27, it is possible to use also capital rebates. Yeah? So to give a loan and to say the reimbursement, it will be only partial of this loan. In the regulation, we have some obligations in order to ensure that the EU budget is not paying more than the investment which was supported. And the second, third, and fourth bullet point you can see on the left, right side are for this purpose. So you can read all these elements together. So we are saying that the sum of all forms of support should not be higher than the total amount of the expenditure item concerned, that grants cannot be used to reimburse support for financial instruments, and financial instruments cannot be used to pre-finance the grants. But all these elements, even if you take it one by one, you may be confused to say how it is possible, if you allow for capital rebate, to say that capital rebate is part of this financial instrument operation, while the capital rebate is used to reimburse support from the financial instrument. But the legal purpose of these elements is to say that if we have an investment of 100, the total expenditure which is reimbursed by the Commission will be 100, even if inside we'll have 60, let's say, loan and 40 grant. Of course, we have to monitor how the EU money are channeled down to final recipients. So that's why the regulation asks to have separate records for each source of support. So even if there is a grant component in the financial instrument operation, the national authorities are obliged to report separately to the Commission in order to ensure that we can trace back the EU support. This grant combination is also linked to the eligibility rules for VAT. And in case of this combination, the rules for VAT, which are used for grants, are applicable to the grant part of the financial instrument operation. So let's say that the only eligibility rule for grants, which is applicable to the grant component of the financial instrument operation, is the rule on VAT. From the audit perspective, Dana.
Yes, yes, thank you, Anna. So from an audit perspective, the auditors will check in case, for example, of a combination in one single operation with a capital rebate, like Oana has given an example. Then the auditors will check on the fulfillment of the conditions to activate the capital rebate. For example, if there is a certificate proving the energy efficiency. Then the auditors will also check the double support. Now, this is not something specific to combinations in one single operation. It will be rather more applicable to combinations in two separate operations. But this is a general verification that the auditors do in all situations that we are talking about financial instruments or grants. So the auditors will always look in this double support aspect. Then the auditors will look into the accounting system of the bodies implementing the financial instruments to ensure that separate records are kept for each form of support, for grants and for financial instruments. And last but not least, as Oana already explained, insofar as the grant component is concerned, the eligibility rules for VAT, those stipulated in Article 64 of the CPR, apply for the grant component only. So the threshold of 5 million, whether we are below or above, here on the slide, we do not cover all possible situations, but just to draw your attention that the VAT rules in Article 64 still apply for the grant component. Thank you.
That's great. Thank you, Oana and Dana. So let's very quickly move just to take a couple of questions. And hopefully if we can start the final session on time, we may have some time for some questions at the end as well. Very interesting first question that's had the most upvotes as well. What will happen if the necessity to link the grant with the FI is not adequate? So that's, I guess, a question about that requirement that the grant must be necessary for the FI. What will happen if it's not adequate?
To be adequate or not is a very subjective interpretation. So the managing authority should explain why they need a grant for the financial instrument. And as I explained, there can be several reasons. Either for very specific, like in energy efficiency, we know there is a part which is not repayable, so it has to cover such part. We have also to support SMEs if we want to do a specific innovative SMEs, we may need a grant. So there is need to have a justification. If this justification is adequate or not, the auditors will need to see with the managing authority, but I have difficulties to envisage when it is not adequate. If the grant, for example, is to build a bridge and the financial instrument is to support SMEs in another part of the country, for sure it's not adequate. Yeah? But if there is something which makes sense economically speaking, we'll see. I mean, you can contact us to assess together if you want, but it's difficult for me to imagine.
Mm-hmm. And importantly, this assessment is done at the level of the financial instrument, isn't it? That's where this test applies. It's not something that should be tested in relation to each individual project, which is then financed by the financial instrument.
Exactly.
Yeah. Okay. Great. Maybe I can ask the second question about how to check potential double funding for financial instruments that were granted in the previous period. So that is, I guess, a project which has received finance from a financial instrument in the last programming period is now a potential final recipient there. So is there a risk of double funding in relation to grant and combination in this context?
I'm not sure I understand the question, because why we are referring to previous periods. So we are talking about double funding for the current period. So what the CPR rules say that in case one operation is supported from different funding sources, EU funding sources. Yeah, be careful here because we are talking about only EU funding sources. Then we should avoid that the same, let's say, investment is not supported twice. Yeah, so we do not have this double form of support for the same investment. So in the end, we do not, the European Union budget doesn't pay twice for the same investment. That's in simple terms. Now, what can be done? So the verifications can, so the accounting system is always a reference to check the double funding. And if necessary, the additional documentation can be requested from the final recipient, like, for example, a declaration with all the form of support for the investments that were financed and that he is claiming money for. Now, what would be the way out of this is in case an investment is supported from different sources, because it can happen, and what can be claimed and what the auditors will look into is whether a pro rata is applied when claiming the eligibility for that investment. So normally a pro rata has to be applied for each source of funding. And the auditors will, this is the usual way the auditors check the double funding. But as a source, as a reference source of evidence for that is always the accounting evidence from the final recipient.
Yeah. That's great. No, thank you, Dana. And maybe the last question, a very quick one, the one at the top there. It's more about the CPR than audit, but can the body implementing a financial instrument outsource decision of granting technical support to another entity, such as a business incubator? So it's a single operation, but they've maybe got a partner on board who might be running a TA, a technical support program, for example, or something similar. Is that possible?
Yes, it is possible, but the body implemented the financial instrument remains responsible of the operation. But
exactly.
They can, of course, externalize. They can externalize activities they are not doing normal. Yeah.
Yeah. Thank you, Oana. That's very clear. Right. Thank you, everybody. I'm going to.
Can I mess up your timing? Can I mess up your timing just a little bit and answer the question at the top now, which is about the whether the financial instrument part has to be bigger than the grant at the level of the project or at the funding agreement. It's the level of the funding agreement, which means that you can modulate the grant level on individual projects, so long as at the overall level, the financial instrument part is greater than the grant, greater or equal to the grant.
It wasn't clear what I said.
Yeah, thank you, John. No, that's really helpful. Okay, so we're going to move to the final session now on irregularities. And what we're going to do as well is we're going to bring all the unanswered questions back into the Slido tool to give you an opportunity to vote. So we won't obviously have time to deal with them all before 4 o'clock, but if you vote for ones that are your favourites, then hopefully we will be able to cover a couple of them at the end of this session on irregularities. So I'm pleased to welcome back Dana and also 2 colleagues from the European Investment Bank Group, Andres Karotamm, who's head of DFI Mandate Services Unit at the European Investment Bank, and also Gianluca Palermo, who's the head of unit in the Guarantee Services Eligibility Unit at the European Investment Fund. Both Andres and Gianluca participated in the Knowledge Hub. Gianluca there on the day, Andres afterwards, and hopefully they can bring a bit of their insight onto this interesting topic as well. But I think first of all, I hand over to you, Dana, and you can introduce the topic.
Yes, thank you, Desmond. Now, there is a lot to say about irregularities, but I will try to keep it short. So, irregularities, well, if you would like to see a definition of what an irregularity is, then you have to refer to Article 2 in the CPR. So, basically, every breach of the CPR rules, of the public procurement rules, state aid rules, of the program requirements, of the national legislation, including list of eligible expenditure, could lead to an irregularity. Now, there can be irregularities, if we can move to the next slide, please. There can be, thank you, there can be irregularities with financial impact or without financial impact. In case now, irregularities are detected without financial impact, then there will be some expectations in the sense that the control system will have to be improved. Now, in case there will be financial irregularities with financial impact, we will see a bit later what can happen. Now, irregularities regarding financial instruments can occur in three different areas. The first one, already Nataša explained, is about advances. The advance payments that are claimed in the first payment application, then normally we do not expect errors because it's just a mathematical calculation to ensure that the ceiling of 30% of the program contribution has been complied with, and also that the advance was not claimed before the payment of the program contribution to the financial instrument. So normally we should not expect errors in this part. Then where we expect potential irregularities during the implementation in the incurred expenditure. So every time there is a breach of the general eligibility rule or specific eligibility rules for financial instruments, then an irregularity can be identified with or without financial impact. Very briefly, what we are about the general eligibility rules. So everything regarding the eligibility of final recipient, for example, whether the SME status was properly verified, eligibility about the area, the field, for example, if the purpose in the program is to support energy efficiency, and the support is provided to urban development, then it will not be okay. Then eligibility of the investment, that the investment is according to the program rules, to the national rules. Then already we have discussed, we have tackled this, the date of the investment, that is, the investment should not be physically completed or implemented before the date of the investment decision. Then the double support, we already discussed briefly before. Specific eligibility rules for financial instruments. We should not forget, like Axel mentioned at the beginning, that there are specific eligibility rules depending on the type of financial product. Then the verifications of ex ante at the moment of the investment decision that the investment is financially viable. Then the verifications that we already discussed with Oana ex ante about the verification about the use to be used for intended purpose. The eligibility of the management cost and fees. So there are many eligibility rules that in case there will be a breach of these rules, then irregularities will have to be reported. Now, we do not emphasize enough that the bodies implementing the financial instruments are responsible for verifying these eligibility rules. So what the auditors will check first, will check that these bodies implementing financial instruments have in place a sound control system. And the monitoring system is also in place, put in place by the body implementing the holding fund over the body implementing the specific fund. The managing authority will also play an important role here because they will exercise through their risk-based management verifications controls over these bodies implementing the financial instruments and could be able to identify weaknesses in these controls and then to address these weaknesses on time. So now, next slide, please. If irregularities are detected and those are with financial impact, then the member state has the obligation, according to the CPR rules, according to Article 103, the CPR, to apply financial corrections. Now, the general rule that is not valid, the general rule for grants, so for everything else than financial instruments, says that in case you identify a financial irregularity in one operation, that the member state has to apply a net financial correction for that irregularity for that operation, in the sense that that money that constitutes the irregularity cannot be reused for the same operation. Except for financial instruments, where we have some exceptions. The exception says that even if an individual irregularity is identified in one operation, that irregularity, that money corresponding to that irregularity can be still used for within the same operation, now it all depends at which level the individual irregularity was detected. And we will see on the next slide. But before that, I would like just to mention that the same Article 103, paragraph 6, is referring to the conditions to be fulfilled to declare an irregularity non-recoverable. But we'll not insist on this too much, because in 21-27 programming period, contrary to 14-20 programming period, the responsibility for recoveries falls completely under the member state. So the member state is responsible for recoveries. What the Commission expects is that the member state takes corrective actions. So whatever an irregularity it is detected, then the member state has either to withdraw that money from the next payment application or to deduct it from the accounts. Next slide, please. So very briefly here, as I mentioned, in case irregularities, but this only for financial instruments, individual irregularities are detected at the level of final recipients or at the level of bodies implementing the specific fund in a structure withholding fund, then the money corresponding to that irregularity can be still reused for the same operation, within the same operation, for a different final recipient or a different body implementing a specific fund, which is not the case in case the individual irregularities were detected at the level of the body implementing a specific fund with no holding fund or at the level of the body implementing a holding fund. Next slide, please. Now, we have some advices on how to prevent irregularities on this slide. So first, you have to look at the financial instrument as a normal operation, an operation like any other operation, but there are some specific eligibility rules that the auditors have to duly consider. Then, when you conclude the funding agreement, the eligibility rules that are there stated in the investment decision part of the funding agreement should be clear and should not be ambiguous, because if the eligibility rules are not clear, are ambiguous, then that could be a source of irregularities. Then an early monitoring visits to the bodies implementing the financial instruments are strongly recommended as a measure to prevent irregularities and possible inconsistencies. Well-established controls at the beginning will prevent, of course, irregularities at a later stage. Regarding the system audit, we advise audit authorities to conduct the system audits at the beginning of the programming period, having in mind the same principle of preventing possible problems and possible irregularities. If you can constitute a buffer for compensating possible ineligible expenditure when clearing the advance, like a bit in 1420, that is recommended. Of course, it's no obligation, but that is still possible, but only for the advance, because the rest is incurred expenditure and what is ineligible will remain ineligible. And, well, a good communication is, of course, is essential at all levels. And once the control and monitoring system is well established, then reliance can be taken by the auditors, I'm referring here to the Commission auditors, on the MA's controls and on the audit authorities' system audit. Now, I would like to conclude regarding irregularities that in 1420, there were very limited reported irregularities on financial instruments. But we have to be realistic that is due to the fact that in 1420, the legality and regularity of financial instrument is confirmed only at closure, because we had advances. So we hope that this low impact of irregularities will still remain in 21-27, but we have also to remain realistic. And I also advise you to read a bit the ECA's reports that still ECA considers that in some member states, the controls at the level of the bodies implemented the financial instruments are weak, present some weaknesses. So we have to be prepared to prevent irregularities. So we need to have very good controls in place at the level of the financial instrument. Thank you.
Thank you, Dana. Maybe I could introduce Andras now, Andras Karotamm from the DFI Mandate Services Unit at the European Investment Bank. Andras, I hand the floor to you.
Thank you, Desmond. I'm just picking up where Dana concluded that we have to be realistic. Indeed, irregularities as such do occur. We may have very good internal control systems, good control frameworks, robust checks, regular monitoring and audits, but they still occur. And in EIB level, I mean, I wouldn't call them necessarily irregularities, what I will present, but we do run our monitoring activity over multiple intermediaries we have contact with. And one of our tasks is to carry out regular monitoring. And how we go about it? So we have regular quarterly reports from our intermediaries. So we have very granular information about underlying investments, practically to every single event happening with those investments, disbursements, repayments, fees, interest, you name it. So we have this data coming us back from intermediaries on a regular basis, which we validate and put to our internal information systems to do further analysis. From that, we can build what we call monitoring scorecard. So we, on continuous basis, follow different KPIs on both let's say, intermediate level or describing activity in intermediate level and also in a level of underlying investment portfolio. We look at elements like credit risk, late loans, contractual governance, contractual milestones, repayments activity, management fee activity, and so on. On top, we complement this scorecard with our usual annual questionnaires to intermediaries, where we have self-declaration about contractual governance and let's say activities during the reporting period. And that gives us very good overview and understanding what's going on with the quality of underlying investments and the overall portfolio, but also how intermediaries help this. And that allows us to develop additional activities or actions. So we can do, for example, desk-based verifications. That means that we don't go on site to visit intermediary, but we ask information to be sent over electronically, and we run our monitoring activity here in Luxembourg. Or we do on-site visits, which also happens and has been also found very useful by intermediaries. Both of these desk-based and on-site verifications will conclude with a monitoring report, which we will send to managing authority for their information and further action if necessary. Relevant and important source of information is also obviously different audits we have. In the intermediate level, being from national authorities, Commission or ECA. So these analyses also feed into our analysis, obviously. Next slide, please. These are the observations, but we have concluded. I have to say a disclaimer here. It's related to 14-20-21 period. So there are some cases which may or may not occur in the future. But these are, let's say, what we have observed. So middle column is what we, let's say, regularly observe. It's coming from our from reports from our intermediaries, and quite occasionally the data there is not matching with reality, and also the underlying supporting documents which should justify the information reported to us are not aligned with data. In the right column, we have cases we have found, let's say, ad hoc basis during our desk-based monitoring. So first one is we have found few double financing cases. It's a design problem, as I see it. We have a case, for example, where there are more than one intermediary, and we go after the same clients, and there are some, let's say, opportunistic clients who apply the support or let's say TFI loan from multiple intermediaries. And obviously, there is no possibility for cross checks to be carried out in those intermediaries. So that check happened in our level, and this is how we found it. We also find misalignments in underlying loan agreements between intermediary and recipient, and then misalignment with the conditions in our operational agreement with intermediary and EIB. And left-hand side, we have, I would say, pretty regular observations. What we have seen in our on-site visits to intermediaries. So, for example, we have also observed that despite there was no, let's say, evidence of double financing, the verifications were not robust enough. Visibility requirements, probably no surprise here. State aid, amounts which we recalculate. I mean, yeah, there have been errors, and also absence of proofs to confirm eligibility. So I've always said to our intermediaries that I mean, we come still before you declare expenditure to commission. So take us as a let's say, take it as a good advice to build up your systems to be more robust. And if we go to the next slide, so these are the normal user recommendations we provide to our intermediaries. So, for example, if we have double financing, we have found invoices used to be a good thing, as a good practice to stamp them, and that is how, let's say, double financing would be avoided in intermediate level. Equally, if there is a self-declaration, that's a good practice as well, or if there is a possibility to run cross-checks in databases, that would be also a wonderful thing. If there have been cases of lack of documents and audit trail, then it's always good practice to have proper file handling, versioning, do your own sampling and test your data through data monitoring methodologies.
Andres, I'm just conscious of time. I'm sorry to hurry you, but we'd like to get to Gianluca. Maybe you could just maybe give us a last
maybe
comment.
To conclude, then, thanks, Desmond. Just to conclude that through continuous training, knowledge management, early monitoring, also mentioned by Dana, and awareness raising, like events like this, I think they are always very useful to keep track and to help you build up your own good, let's say, management control tools. And over to Gianluca, who will give more insights about eligibility monitoring.
Great, thanks, Andres and Gianluca. Yeah, hopefully in a short period of time you can just give us your insights into the key insights into this topic. Thank you for joining us.
Thank you all for the invitation and this challenging task to do very quickly. It is not for me, as you know. So I'm going to give you a very quick overview of what is the eligibility monitoring activities when it comes to checking the support provided to final recipient by intermediaries benefiting for guarantees from guarantees or counter guarantees from EIF under financial instrument. An example of some of typical findings is Andres, and also some suggestions on key aspects which in my view are needs to be kept under control when deploying the support to final recipient. So eligibility monitoring at EIF is a process that starts when we receive the data on the support provided to final recipient from financial intermediaries. These data are screened through a series of data consistency checks in order to ensure that we do not receive and we do not report to managing authorities and audit authorities data that are inconsistent with what we should be reporting on the specific financial instrument. This means that some technical checks are applied in order to screen the data and apply plausibility checks on the data. On top of these plausibility checks, we perform some controls in order to mitigate, for example, the SME status risk. In order to do so, we use an SME classification tool that is a tool that is embedded in an external database that we use in order to prevent again to onboard under our financial instrument recipients which do not qualify as SME. On top of the data checks, we perform monitoring visits that target the eligibility of support provided by financial intermediaries to final recipient. The purpose of the visit is to obtain evidence that the intermediary has assessed the eligibility of the support that is requested by the final recipient, and that the intermediary has collected the relevant supporting documentation to perform such an assessment. The other aspects that we monitor is if the financial intermediaries have implemented the necessary checkpoints in their internal processes that are applicable to the deployment of the financial instrument, meaning are there checkpoints that are necessary, for example, to check SME status before the loan origination in order to make sure that all the eligibility criteria are taken under control. I will not go through the long list of the document that we request to financial intermediaries. However, what happens is that after the monitoring fieldwork is concluded, we prepare a report that we share with the financial intermediary. If there are eligibility issues that are detected and reported to the FI, corrective actions are discussed and taken. If it is not possible, of course, to take remedial actions, the affected final recipient transactions shall be excluded from the portfolio. So we don't guarantee anymore, we don't provide support in relation to any such affected final recipient transaction. Another form of monitoring that is not a check of final recipient transaction or a check of the data is provided by providing support to financial intermediaries in handling typically anonymized questions or providing capacity building type of activities in order to make sure that the financial intermediary has processes, the right understanding of the financial instrument and the right processes in place to deploy the facility. We can move to the next slide. An example of typical monitoring observations along the lines of what Andres already mentioned. We have encountered issues with the assessment of the final recipient sites. So in case we speak about SMEs, the application of the SME recommendation on the qualification of micro, small and medium enterprises, especially in relation to the need of consolidate linked and partner enterprises.
Gianluca, sorry to interrupt, but maybe one more minute.
Very quickly. Yeah, absolutely. Let's jump onto then the suggestions, because I think this is a very interesting part, and is the message that we also I would like to leave to the participants. So given also the shift in the approach in the intended use of fund verification, what in my opinion are some suggestions that are very relevant to intermediaries when deploying intermediated financial instruments is that it is necessary to document well the purpose of the transactions in order to have to let auditors or managing authorities have the possibility to know what's the purpose of the financing that has been assessed during final recipient transaction origination. It is important to assess whether while originating the loan, the company is active in any restricted sectors. That can be EIB group restricted sectors or also state aid related restricted sectors. Another important suggestion is, besides the use of checklists, that is useful also to show that a process was followed. It's not mandatory in case the financial intermediary has its own processes to be followed. A very important suggestion is SME status checks. The SME status checks needs to be performed based on the financial statements. It's necessary to have at least least 2 financial statements in order to cover at least 2 out of the 3 years period based on the SME recommendation. In case possible, use of external database is important. In case, for example, the final recipient does not need to produce financial statements, or it's not possible to obtain them. Although for us it's a must that for SME status assessment, financial statements are collected for all the relevant period and for all partner and linked enterprises. Last message, it's very important given that we are talking about chains of events and financial instrument whereby the support is provided, is channeled from the managing authority to the final recipients, that training material is provided or internal informative documents are shared within the financial intermediaries networks of branches. In order to for the sales force to be able to screen properly the transactions that are provided to final recipients.
That's great. Lovely. Thank you, Gianluca. I really appreciate you whizzing through that as quickly as you can as well. And the slides will be available, and I'm sure they'll be a really useful resource for many people. Maybe just before we close, we'll try to aim to close for 10 past. If we can just look at the questions again. Thank you very much for everybody who's been voting. We did have one question about irregularities, and this is an interesting one. We've been talking about combination, and this is about irregularity of the grant. So in the case of a combination grant, does an irregularity of the grant also lead to the cancellation of part of the loan? I don't know whether, Dana, you could maybe answer that.
This question has been already answered in the paper issued on combinations of financial instrument and grants, and maybe Desmond, you can remind the audience about that paper. So no, the answer is no. So the loan part will not be affected by an irregularity in the grant part.
Thank you. And yes, it's the Knowledge Hub report we did on combination, the implementation of combination and grants. It's available on our website in our library. So thank you for that plug as well, Dana. Okay, look, that's great. We can see these are the most popular votes. I don't propose to go to them now, except to say thank you very much and to reassure you all that we will certainly come back to those. Again, I can see a lot of the questions are around the novelties, around this new thing on eligibility, and double support in connection with combination. Well, so thank you very much for the questions. We actually had over 100 questions raised during the session, so very grateful for that, and we will use that to inform what we do in the future. But I would like to now maybe move back to the slides, please, colleagues, and hand over to John to give his final comments. Before we do that, if I can just show you a slide which shows our resources, where there's available on our website, a podcast and Knowledge Hub report, and the checklist itself are all available at feecompass.eu. Maybe I'll hand over to you now, John, and you can give your final comments.
Thank you, Desmond. And first of all, lots of thank yous. Firstly, to you personally for guiding us through this very dense, very information-packed presentation. Excellent moderating as ever. Secondly, thank you to all the participants who turned up in such numbers. The one time we checked, we had nearly 600 people online, which is absolutely terrific. And I think nearly 20% of those people may have asked questions. Okay, some people may have asked more than one question, but the level of your interest and enthusiasm and participation is really appreciated, because we think we have a tendency to think that we understand everything, and therefore everybody understands everything, and this is never the case. This was a work done. A joint work done by my colleagues, and the audit colleagues, with some input from FI Compass colleagues in the EIB. It's very much a joint effort. And I'd like to thank all of those who've been working on this for 2 years, possibly longer. And one final word: reading through the questions, lots of them were very technical, and lots of them, and some of them seemed to sort of say, can we go further? Can we do more checks? The questions about can we go to the final recipients in any case. I would go back to Axel's first point, which was proportionality. That we've simplified the rules in the CPR, we've simplified the audit methodology. A light touch is very possible if everything is in order. Obviously, if issues arise, then the touch gets a bit heavier. But please be proportionate, and please be as light touch as your risk assessment allows. Once again, thanks to all.
Many thanks, John, and may I add my thanks as well to all of the speakers and to all of the participants as well for your participation.